Welcome to Primary Markets TV Asia Pacific, your update on newly issued securities in the region and upcoming IPOs. I'm Dan Barnes. This week is seeing 10 IPOs launched on the Australian Stock Exchange. These include Control Bionic, which produces technology to support people who are suffering from paralysis and loss of speech, and also listings from several firms in the mining, exploration and commodity business. That is Desert Metals, Rincon Resources, Akora Resources and Errawara Resources. Cluey, the online tutoring platform, is also listing. Of course, over the COVID-19 period, a lot of people have been working from home and homeschooling. Thematically, we've seen investor interest moving into funds which are focused on commodities, notably gold and silver this year, as well as healthcare. And that's reflected in some of the IPOs in Asia Pacific. Hong Kong has a busy week for IPOs ahead, but possibly its most notable is going to be JD Health, coming out on the 8th, which is expected to raise around $3.5 billion. JD Health, of course, fits into that wider interest from investors in healthcare and pharmaceutical assets resulting from the COVID-19 pandemic. It's also interesting for being part of JD.com. According to Bloomberg reports, the firm has plans to list its fintech unit JD Digits, and IFR has said it also expects to list its distribution business, JD Logistics, which was spun off from the main firm 3 years ago. JD.com, of course, is an e-commerce giant in the region. In other news, Board of China Development is reported to acquire a majority stake in China Life by acquiring an additional 21% of China Life's outstanding shares. Well, now we're going to move on to the fixed income markets, and joining me is Charles MacGregor, Head of Asia at Lucror Analytics, an independent research firm and also a Smartkarma Insight Provider. Charles, welcome back to the show.
Thank you, Dan. Good to be back.
So tell us, which new bond issuances have caught your attention over the recent weeks?
Just a bit of a backdrop, the last sort of 5-6 weeks have been relatively quiet. There was only 11 billion issuance in November compared to 38 billion in October. Year to date, that takes us to about 311 billion. So that's still ahead of last year by about 6% year over year. So it's been relatively quiet the last couple of weeks. What we did see this week was a rush to perpetuals. We had issuers seemingly looking to issue what they perceive to be cheap capital and seemingly insatiable yield-hungry investors that are chasing these perpetuals. Look, I'll mention two briefly.
Yeah.
One was China Huaneng, which is a state-owned entity power generator. Mm-hmm. It issued $1 billion in two tranches, a non-call 3 and a non-call 5. And they were priced around about 3%. So this is a perpetual, and it's been priced at about 3%. So people obviously taking a lot of comfort out of the state-owned entity status.
Yeah.
What was interesting there was that it was 7 times oversubscribed. So they had an order book of about $7 billion for that $1 billion offer. The second issue that caught my eyes was New World Developments. It's a Hong Kong-based property company. And it issued 750 million in a non-call 3. And in that case, the order book was about 3.8 billion, so about 5.5 times oversubscribed. So definitely a lot of demand for these types of issues from investors that are just getting their yield hungry. They're getting squeezed in other markets like the US, where overnight high yield spreads came down to the lowest level since June 2014.
That's really interesting. Thank you. Now, of course, talking of state-owned enterprises, we have seen a number of defaults, and some of the Morgan Stanley analysts, as we mentioned last week, noticed that net new issuance for AA and AAA in China on the week of the 20th had dropped off. Do you have any thoughts on the defaults and the impact that might be having? And of course, we have had some government meetings and announcements since then.
Okay, I mean, there's been a lot of press the last couple of weeks. I was reading 2 articles today highlighting this surge in defaults. To put it in perspective, there were quite a few defaults in 2018, 2019. there were very few, if any, in the early part of the year, and these are state-owned entities that we're talking about, as policymakers were keen to sort of reduce the impact of COVID-19. But what we're seeing now is that Beijing's trying to adopt a policy whereby it's going to have more of a sort of a market-led approach to risk management, and hopefully this will result in some of these zombie companies failing. Now, in the short term, obviously people will see that as being a concern, but from my perspective, it potentially in the long term brings a bit more certainty to debt capital markets. It allows investors to better price risk. Since November 18, a couple of other things have happened. Mm-hmm. Foreign investors piled into the onshore market because they were attracted by the yields, and I think they're more than happy to take some of those state-owned entity companies that are very high profile, and so that was one thing. And the second thing I noted yesterday is that the spreads on Chinese AAA paper were at the lowest level for 8 months. So the market, I think, is actually starting to calm down.
Do you have any perspective on the year ahead? We're nearing the end of the year now. You've mentioned that levels are slightly up on last year. Do you expect that to continue through December potentially?
It's really hard to tell. In the high yield space, I wouldn't see a lot of new issuance because Chinese property companies have now been restricted by the three red lines policy, which restricts if they have certain financial parameters that are outside limits that have been set by the government. So in the high yield area, I don't see a lot, but in the IG area, I would expect what we've seen in the last month to continue there.
That's great. Charles, thank you very much.
It's a pleasure, Dan. Thank you.